So even if you believe that altcoins are going to perform well, it doesn't make sense to trade them on this short-term basis based on your election prediction, because if you get it wrong, you're going to get smoked getting out of your trade. Whereas you get it wrong in Bitcoin, maybe you lose a few percentage points. So what, right? You live to fight another day.
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin, author of The Cryptopians. I started covering crypto 9 years ago, and as a senior editor at Forbes, was the first mainstream media reporter to cover cryptocurrency full-time. This is the November 1st, 2024 episode of Unchained. Polkadot is the original and leading Layer 0 blockchain with over 2,000 plus developers. And the Polkadot 2.0 upgrade will be a massive accelerator for the ecosystem. Join the community at polkadot.network/ecosystem/community. FBTC is the fastest growing omnichain BTC asset this summer. Join FBTC Points-inspired campaign where you can hold FBTC to earn sparks, lucrative yields, and token drops, all on your Bitcoin. Today's guest is Arthur Hayes, co-founder of BitMEX and chief investment officer at Maelstrom. Welcome, Arthur.
Thanks for having me.
I just want to start this episode by noting that, as in every episode, nothing we say here is investment advice, so do your own research. That said, we have Arthur here because people might be interested in how someone like him, meaning someone very well versed in both crypto and macro, would think about trading the election. So, Arthur, at the moment we're recording, the election is in a week. Yeah, I should just let people know we're actually recording on a Tuesday. What are you anticipating broadly when it comes to how the election might affect the markets?
So I think it doesn't really matter who wins, Trump or Harris. In the medium term, more money will get printed, and therefore crypto should do well or will do well. The short term, obviously, the market really likes Trump because the things that Trump is saying and how he's going to print money and hand it out is what, politicians in the United States have been saying since Reagan in the 80s, which is cut taxes, decrease regulation on businesses, and keep spending the same, if not increasing spending. So the rich people get tax breaks and there's equities pump and everyone else gets their healthcare paid for, essentially, right? And the U.S. can continue bombing everybody because the defense budget isn't going down. That's what Trump is saying. And the markets like it. Harris is basically saying the same thing, but in a more convoluted way and probably more annoying given just the way she sounds. But it's essentially the same message delivered in her packaging for her particular audience. But the market likes what Trump is saying because it understands that. I think the real risk here is, regardless of who wins, if the other side says, I don't believe that this election was done in a proper manner, I believe there were inconsistencies, I'm not accepting that my candidate lost, let's take to the streets, let's take to the courts, and let's create a situation of confusion as to who will be the next leader of the American empire. And so I think that is the real risk for markets. Obviously, people right now are saying, oh, yeah, Trump is, odds-on favorite by a very, very, very small margin to win the election. I still think it's pretty much a coin toss. But the market seems to think Trump's going to win based on some of the markets like Polymarket and Drift has a market as well. So that's where I think the market is right now. I'm not really adding too much more risk on right now. I'm already long a lot of crypto. I'm long some energy stocks. I'm happy in my positions. Do I feel that it's prudent to add more risk here, given that I think there's a very real chance that we don't know who the next U.S. president is for, weeks? Might even be past January 20th when they're supposedly supposed to be sworn in.
Oh, wow. Interesting. Well, one question for you. What if it's sort of like a medium scenario where it's not decided right away, but maybe it takes like a week or two simply because, there's like mail-in ballots, there's like counting, there might be a few recounts. But if it's, not the kind of pandemonium you describe, but just sort of like a longer term uncertainty that could last, I don't know, a week, 2 weeks, even a month, then what do you think?
I still think the market's sell off. I still think right now the markets are priced for a Trump victory, Republicans taking the House and the Senate, and him raining down money on all the rich people, right? So I think that's what the markets are priced for. They're not really priced for, even if he does win all those things, if the Democrats and the people come out in the streets and they file challenges and Harris does not concede, right? So it's funny. So at Maelstrom, I like to train the youngins in risk management and making decisions under uncertainty using, implied probabilities. So we have a few different election games that we're playing internally, and I give, $5,000 to $10,000 per game for the winners. But if you lose, then you have to pay into the communal pot, and we buy drinks for everybody when we're next out at a conference or something. So there's a cost to betting and not getting it right. How I am deciding when a bet is paid out is based on when the loser concedes that they've lost the game. That's when we know it's over. When Harris gets on TV or Trump gets on TV and says, hey, I lost, the other person wins, that's when the election concludes. And so it doesn't matter who's in the streets or all the electoral challenges in the courts. If the actual candidate who lost says, I lost, then we know it's over. So who knows when that's going to happen?
Well, what about this scenario where, like, even to this day, Trump won't say that he lost?
I'm pretty sure that he conceded the election in 2020. He might have, after the fact, said, oh, there were all these things that happened, and maybe, there were fake voters, or he insinuated that some of the things that his supporters were saying that in terms of the election wasn't done properly, but he conceded the election.
Okay, right. Sorry, he conceded on January 7th, 2021, which that's a significant day. But yeah, you probably heard in Joe Rogan's thing, he didn't say, or he actually made a slip and he said he lost, and then Joe Rogan laughed at him, and then he said, I didn't lose. But anyway, okay, I see what you're saying. Well, so one thing that I saw was, so you said that you're positioned long. And so I saw you told CoinDesk that you have 5% of Maelstrom's funds in USDE, which is the synthetic dollar of the Athena system.
Correct.
And then you said, like, you'll move funds out when the election winner becomes clear, the loser accepts defeat. So is the other 95%, is that all just long and all those things that you already described?
Correct. Bitcoin, ETH, token projects, right?
Okay, so you're not really, like, you're only using the 5%. So it actually sounds like you're not really trading the election. Like, are you going to trade on, because I imagine there's like a lot of volatility. Are you going to trade that night or during that time period? No,
absolutely not. I'll probably be, when the election will be coming out, I'll be in the morning in Asia time. I'll be stretching in my yoga room, getting ready to play tennis. The election, whoever, the winner will be who the winner will be. And the markets, again, they're going to print money. I'm not worried. Yes, there could be some medium-term, some short-term volatility in terms of, people not accepting the result. But at the end of the day, the American population is not voting on let's have austerity versus let's print more money. It's let's print more money and let's decide who we're going to hand it out to, whether it's the people who like Trump or the people who like Harris, right? That's the decision that they're really facing right now. That's it.
Okay, well, this is hilarious because the vast majority of my questions are about, like, how to trade the election, but we can wing it. So you're not doing that because what?
What's the point, right? So you're going to sit here and maybe you'll eke out a few percentage points here and there trying to pick a winner. But then if you're wrong and you're on the wrong side of the trade, like the Trump trade has been going on for the last probably, I don't know, month or so. Once it's been in the media, like, oh, the prediction markets say Trump is winning. And people kind of don't really understand what the prediction markets are really saying. It's actually much closer than, the 68% or whatever it says on Prime Market, the percentage chance of Trump winning. It's actually much, much closer than that. It's probably within the margin of error of any polling, whether it's Trump or Harris. But for whatever reason, the financial markets are like, Trump's going to win, strong dollar, tariffs, low taxes, deregulation, blah, blah, blah. Markets have been melting up. Obviously, you had a Fed cut in September. So that's providing another form of stimulus into the markets. And so the markets are priced for a Trump win. So even if Trump wins, yes, the S&P could be up another 100% over the next 12 months. But if you're really just trading a week-long period, you could actually lose money, even if you're right on the bet that Trump wins, and you entered the market around now. Because, Trump wins, cool, and we sell off 5%. That could happen. Or Trump wins, the market stays flat, right? And so you've taken this risk, and you're not going to be properly compensated for it. The better risk would be, okay, well, I think Harris is going to win, and I think the market's going to take that in a negative fashion. Therefore, I'm going to put on a tactical short position because the market's not priced for a short position. The market's not priced for the loser not accepting the result. The market is not priced for Harris winning and being a bit confused about how she's going to print money and hand it out to people. She's still going to do the same thing, but it's just a little bit more convoluted. So I would say if I was going to place a trade on, I would put that trade on. I still don't like the asymmetric return profile, but if I was going to put a trade on, it'd be that.
That's only because the polls are in this dead heat and you feel like the prediction market maybe is off. And so the only way to benefit would just be, the odds that there is a Harris win are higher than the prediction market is currently suggesting.
The prediction market is basically saying if I ran the election 100 times, Trump would win 60-something times, and Harris would win 30-something times. That doesn't tell you the probability that Harris or Trump would win the election. It's like if I flipped a coin, I know a fair coin is 50-50, and I flip 100 times, I'm not going to get 50 heads and 50 tails. There's variation within that distribution. If I flip a coin infinite times, then I get the fair 50-50, right? So we only have one event, and we have a probabilistic curve or cloud of what could happen. We don't have enough parallel universes that we can run this trial in to get the actual probabilities. And so probability market is distorting people's mind thinking, oh, Trump is definitely going to win. No, that's not what it's saying. And so I think people have the wrong impression of these markets because they don't understand statistics.
Okay. But that's what I'm saying is that the reason why you would only put on the Harris trade is simply because you feel like the prediction market is not accurate. And
no, the prediction market is accurate in saying what it is. It's the interpretation of people. That's the problem. So I think the market is misinterpreting what the prediction market is telling them. And so they're saying, oh, Trump's going to win. Yeah, maybe he could win. But the probability that he wins is not 68%. It's probably 50-50.
Right.
And
that's what I was saying. Right.
And so so it's a better odds is to bet on Harris winning and the market selling off. Not to say that's going to happen, but if I had to put a trade on, that's what I would put on.
Right. Okay. Yeah, that's what I was meaning is because it is confusing to see how the polls are basically neck and neck. I think actually right before we got on here, I looked and pretty much every poll has Harris ahead by 1 point. But I'm sure people know that the popular vote and the electoral college are two different things. And the Republicans generally have an advantage if the race is that close. So yeah. So anyway, so the point is, I guess, for the prediction markets, it is like probably some combination of, people getting overconfident, but also maybe the electoral college confusion. So
yeah, there's lots of confusions, right? Most people don't understand math and statistics. Most people don't understand how the American election system works, right? It's a lot of misunderstandings and has led to everyone thinking, oh, Trump's going to win. Okay, markets go up. Okay, it could be, but that's not the bet I'm going to take.
Okay. Well, so let's just talk about, now we've been, talking about markets broadly, but do you have specific expectations for some of the major different cryptos? Like, would you say that you think Bitcoin might perform differently from, any of the other coins or, like ETH or Sol or whatever?
I think that Bitcoin leads the market. And so if you're going to be betting on this in a fashion that you get the most liquidity, right? Because if you're wrong, you want to get out of your position immediately and you don't want to, suffer massive, liquidity comes out, bid-ask spread goes wide. You try to, big crowd trying to get out a small door, right? So that's why if you're going to bet, you want to use Bitcoin, one of the majors, Bitcoin, ETH, maybe a bit of Sol. Those are the things that I would be speculating using. The altcoins will do well. So if Bitcoin goes to, 85,000 next week because Trump wins and everyone's like, yeah, Trump. And then you see, oh shit, I'm rich now, or I'm richer. Therefore, now I need to own goat and, smoking chicken fish and a bunch of other dog shit around the world. I obviously own those two. That's why I mentioned them. Always be closing. And so, yeah, I think the altcoins and the meme coins and the dog shit, it follows Bitcoin. But if you're going to speculate in the election, you want to stay in the majors because, it's very likely you get it wrong. Either you get it wrong on the probability of the winning of what's going to happen and how the market responds, or you just outright pick the wrong person. You want to be able to get out of your position as quickly as possible with the least amount of slippage, which is why why traders will concentrate themselves in the majors.
Okay. And so would you still say that you think Bitcoin is positioned to perform the best, even though right now, at least at the time that we're recording, it's trading near its all-time high.
Yeah, I mean, I think the liquidity and the flows will go into Bitcoin. Post the election, obviously, if Bitcoin is rising, then the other stuff will go up more in percentage terms, right? That's the whole point. It's, okay, I've made some money in Bitcoin, I'm going to rotate into this other things because people have the nominal price fallacy. Oh, Bitcoin's 72,000. I'd rather just buy something that's worth $1 because that's cheaper. Therefore, it goes up faster, right? It's that fallacy that a lot of traders have and investors. And so if you want to front run that, then you say, okay, Bitcoin's going up. So that means people are going to go, oh, I want the cheaper thing on a nominal basis on it. So I'm just going to go buy that. And so that's sort of the altcoin rotation kind of thing.
Okay. But then I guess like if people are anticipating that, then they could just buy the altcoins originally or like,
cool.
Yeah,
they could. But the problem is if you're thinking like a trader, but I think a lot of people are just we know they're terrible traders, right? They don't actually think about these things before they go and press the button, right? You have to think about what happens when you get it wrong. When you get it wrong, you want to make sure you lose the least amount of capital. And so if I get it wrong and I'm in this fucking dog shit altcoin, liquidity evaporates and all of a sudden I'm looking, 10, 20, 30% loss because I just can't get out of my position. Or I could take the same bet on Bitcoin. I could even lever it up. They get the same notional exposure or same risk profile, but I still can get out of my position much easier because Bitcoin is so liquid versus these other things. And so even if you believe that altcoins are going to perform well, it doesn't make sense to trade them on this short-term basis based on your election prediction, because if you get it wrong, you're going to get smoked getting out of your trade. Whereas you get it wrong at Bitcoin, maybe you lose a few percentage points. So what, right? You live to fight another day.
Right. And that's so funny that you said I was thinking like a trader because I have never traded anything in my life. But anyway, so obviously Ethereum has kind of been a very interesting token to watch this year. People think of it as obviously, I mean, it's been the, second largest crypto for a very long time. And it obviously has accomplished a lot in terms of the ecosystem, developers, et cetera. But the performance this year has been really terrible. The ETH BTC price ratio is low. Sol obviously has taken a lot of the wind out of the Ethereum. So how would you think about that, trading that particular asset?
So I haven't run the numbers yet. I was actually having a conversation with one of our portfolio companies, Covalent, as they have like an Ethereum data wayback machine. And we were talking about like, from a fundamental perspective, like why has Sol done so well? Like if we take a look at the snapshot of FTX goes under in November of 2022, Sol goes down to something like $7. I think Ethereum was like at $1,200, something around there. And obviously Sol's at 180, whatever it is now, and Ethereum's at 2,600-ish, right? So Ethereum's like double-ish. Sol's at what? 20, 30x almost. And so why has that happened? Now, I haven't run the numbers yet, so I'm just talking out of my ass here. I have a hunch, and my hunch is that the underlying profitability of being a validator in Solana has changed from a percentage basis at a larger magnitude than is as if I was in ETH. And so therefore, if the market's forward looking, I'm going to ramp that asset, i.e. Sol, more because the profitability has changed more, because the unlocks have sort of slowed down because of MEV, because of just the transaction volume and how much money you're getting in terms of fees for being a validator in Solana. The profitability of the chain has improved dramatically over the last 18 months, whereas ETH really hasn't done that much, hasn't done poorly, obviously. But so then the question is, on a go-forward basis, on a marginal return basis, is that going to slow? Is the Solana improvement in terms of the profitability of the network going to slow, and therefore the price sort of tops out at this level? And then the ETH accelerates as sort of the improvements on the costs of L2s renting block space to secure themselves on the ETH chain has gone much cheaper, therefore more flow can go through L2s, and the price is obviously more competitive with the monolithic Solana architecture, right? That's the thesis and the hypothesis. I don't know if the data backs it up, but I think that just from thinking about it, that makes sense to me as one reason why Solana, from a theoretically fundamental cash flow basis, would do better than Ethereum over the last, since the FTX collapse.
Okay, but going into the election, then would that?
Going into election, I'll trade Sol. It's the high beta Bitcoin, right? So I want the whippy action. It's liquid, and I know that it's going to pump if Bitcoin does well. then I want to trade Sol. I don't want to trade ETH. It's too slow right now. It's for these cash flow things that matter. It's going to take months and sort of a narrative shift in terms of people's mindset about what ETH is. Right now, ETH is slow, old, boring. Vitalik's trying to become a social media influencer right now, which he's never tried to do because everyone's like, oh my God, ETH is so fucking boring. Vitalik, get on social media and make it interesting again, right? I don't want to trade that. Solana's got the mind share. It moves. It's high beta Bitcoin. And so, and I actually put on some small positions. Bitcoin broke out. Okay, I'm not going to buy Bitcoin. Let me buy Sol. Because when the market rotates, then it's going to outperform, right? ETH is probably equal beta to Bitcoin, if not a little bit less. So I'm probably not going to trade that as a trading position. That's not to say I'm going to sell you my ETH, which I have a very long core position in ETH. It's just Solana is a better trading vehicle right now, given the mind share that it has amongst medium frequency traders.
Yeah, and in particular, are you saying that because of meme coins?
Meme coins, active community, UI, UX, all the reasons, fast, all the things that people think of when they think of Solana, right? And the fact that it's gone from 7 to 100 to 180, right? So people have made a lot of money over the last 18 months. And so as humans, we say, oh, that happened in the past, so it happens in the future. Right. So there's liquidity there. And so they're willing to sort of like ape into things and really ramp this thing if Bitcoin starts going. So that's why it's high beta Bitcoin.
Okay. I also want to ask you about this whole, L2s are parasitic to ETH narrative that's been going around. Do you think that's true or do you not think that's true?
I don't think that's true. Again, I need to get some more numbers behind this.
Wow.
This is me talking out of my ass here, but like, if all the sort of complex transactions get pushed down into the L2 layer and, people are complaining they're accruing all the value, but at the end of the day, they need ETH for security, right? And so unless you're going to tell me that the intrinsic token on a lot of these L2s is going to go up 80, 100, 200x to match the market cap of Ethereum, then it's not as secure in a proof of stake system as Ethereum, and therefore they need the Ethereum ecosystem. And so the bet that you have to make is over time, there's going to be so much flow and transactions in aggregate in L2s that they're going to have to spend so much money securing themselves by posting transactions on the ETH network that's what gets you your valuation. Now, that's the assumption. I think that's the view you need to have. And maybe some people say, I don't like that view. I still think that because the L2s are taking all these transactions, that ETH as a chain is not as valuable, and I don't want to be involved in that. I'll go buy this cheap L2 token, right? But again, then you're just competing with every other L2. I don't know how many fucking L2s that we get pitched, right? L2 for this, L2 for that, right? How do you pick which one is going to make you money as an investor? But they all have to secure themselves on Ethereum, right? Otherwise, their token needs to go up a lot more than what has already gone up. It's almost inconceivable that these things can go up high enough to sort of secure themselves in a proof of stake manner similar to what Ethereum already gets you out of the box. So I think this L2 is a parasitic ETH narrative is people not really thinking about what ETH is doing for these L2s and what these L2s need to do in terms of a price and market cap appreciation to match the security that they get out of the box by being an L2 on ETH.
And what do you think about this trend of the L2s on Solana? And I forget, Anatoly or somebody or Austin Federa wanted to call it a different name, which I'm blanking on. But what do you think of that?
I haven't really looked into it much. I mean, I don't really see there's going to be much excitement there yet because Solana is just so fast, right? Whether or not you think that's scalable or it's going to continue in forever in perpetuity, whatever. But it's fast enough right now. So what's the point of an L2 other than to take more dumb VC money and incinerate it?
Okay, yeah, by the way, they were calling them network extensions.
Ooh, network extensions. Oh, I'm going to raise a new $100 million fund on network extensions.
Anyway, well, so, we were discussing, obviously, what could happen around the election. Do you see anything different happening potentially in DeFi than everything else we've been discussing?
Again, some people think, oh, Trump's going to be better for regulation on crypto, and therefore DeFi does better because more Americans can participate. I don't really see that. Trump was president for 4 years. Look at his record. He did fuck all, right? So he's got to, and also number one, if the Republicans don't win both the Senate and the House, Trump can't do fuck all. He can't do shit. He can only do executive orders on whatever things that executive orders can do. And I don't really think that is like a comprehensive reform of the American framework around cryptocurrency regulation that needs congressional bills and all that kind of stuff to happen. Can't happen. And even if the Republicans win both, most of them hate Trump, right? He's like an anathema to them. They only kneel and kiss the ring because they're going to get booted out of office. But once they get elected, it's prime time to say, fuck you to Trump. You're not a real Republican. You're just a, New York City liberal Democrat in disguise. I don't see how Trump gets a lot of these things that he says on the campaign trail actually put through, because in his own party, he's not really at a base level liked that much. So even if the Republicans sweep, again, I'm not really seeing him being able to follow through on all this stuff. Right. So there's a lot of ifs here. And now we know what Harris is going to do, the same thing that's been happening for the last 4 years. So I think the DeFi narrative, better regulation in the US, therefore more Americans can do DeFi, and therefore all these American VC funds can come and pump our bags, I think is a bit of hopium.
Okay, well, yeah, a couple of things that I wanted to say there about Trump. Just because he made all these crypto promises to crypto people, but
he's a politician. Politicians go around and they make promises and they don't fulfill any of them. That's their job. To lie to you, to get them to vote for you. You get in office and then you do whatever you felt like you were going to do anyways, or what you can actually accomplish given the limited political capital that you have, right? So imagine that, the Iran-Israel thing kicks off, or Russia-Ukraine kicks off, or China-Taiwan, or any of the other global configurations that could happen, that will happen over the next 4 years. Is he going to be spending his time trying to get comprehensive crypto regulation to help the crypto bros, or getting more money for defense contractors so they can go bomb everybody around the world, right? It just doesn't make any sense that people think that crypto is his priority. There's so many other things that are going to take his attention once he gets elected into office, and crypto is going to be way, way, way down the list.
Okay, wow. I'm excited to see what the comments are on this episode after it comes out. The other thing that I wanted to mention, though, is when you said you think Harris will continue the policies of the Biden administration on crypto, so here at Unchained, we did report that there's a couple of names that apparently are being floated in her circles of who they're looking at for who could replace Gary Gensler as the SEC chair. And one of them is Chris Brummer, who has testified about crypto positively multiple times in front of Congress. And the other was Erica Williams, who is the head of the PCAOB, which stands for the Public Company Accounting Oversight Board. And apparently they're both more pro-crypto. So, obviously
again, I'm going to call bullshit on that. Gary Gensler was a professor at MIT. He knows crypto inside and out, taught a course on it. People thought he was pro-crypto when he got in. And then what happened? He became a political animal, and he had to do what Elizabeth Warren told him to do because he wanted the Treasury Secretary, the Secretary of the Treasury job, right? And so, yeah, maybe these people on paper in their past life before they got to Washington and got corrupted by the power that they could get by doing the bidding of others to get the next position that they want, say all these things, but then they do what they're told to do afterwards. So again, people don't understand politics. This is, crypto bros. Look, we're going to hire somebody who said in a public statement or taught a course that they're positive crypto. And then they get in there and they get in the government machine, and that all changes because the priorities of the government machine are completely different than what you did in the private sector as your own person.
Okay. Yeah. Well, we'll see what who knows? Maybe neither of these people will end up in that position. So in a moment, we're going to talk more about other parts of the market. But first, a quick word from the sponsors who make this show possible. FBTC is an omni-chain BTC asset contributed by Mantle Network and Alpha Global. Launched in early July, FBTC's TVL has already passed $125 million, making the fastest growing BTC asset this summer. FBTC's points-inspired campaign, Sparkle, has officially started, with lucrative and sustainable yields, plus points and token airdrop from Babylon, Mantle's new token Cook, and more. FBTC is the BTC solution you've been waiting for. Visit fbtc.com/ongoing-campaign today. Back to my conversation with Arthur. So one of the last areas of the crypto markets that we did not discuss are meme coins. What do you expect to see from them in the election period?
So again, I think they're high beta Bitcoin, right? And so if Bitcoin starts doing well, more money is going to come into meme coins. But Bitcoin's broken out over the day or so above 70,000. Maybe it's going to eclipse the fiat price in the nominal all-time high. And meme coins are sort of lagging, right? Because I think the market needs to see more out of Bitcoin first before we get that rush into meme coins. And so I think you don't want to trade these things right now. You want to wait. So if the narrative is Trump wins good for Bitcoin, wait for Trump to win and then see how the things perform and then ape into them. But don't go into them first. Go into Bitcoin first. Be safe. Be safer. And there's no such thing as safe. Be safer and don't experience just like getting your ass handed to you because you picked the wrong horse and then the liquidity evaporates and you can't get out of these things. So but I think meme coins will do very, very well in the medium term as, the Bitcoin drags everything else up with it.
And so you mentioned earlier that you're a fan of GOAT, which
yes.
I am like obsessed with this whole story. So we just discussed this on the podcast, but as a reminder to people, this is the meme coin that is associated with the AI agent that was trained on a conversation between two other AI agents that picked up some lore from like the late 1990s internet about this very vulgar meme called Goatsy. You guys just listen to the previous episode because I don't want to just have to describe it again because I gave the graphic details of that in that other episode. But anyway, what are your thoughts about GOAT and AI coins?
So I think an AI coin is all about being either the first or the second in sort of a new genre, right? Because that is and then there's also all sorts of derivatives afterwards, right? You wanted to own the CryptoPunk and maybe the second PFP collection when we're talking about NFTs in like 2020, 2021. But all the other pieces of doxa you don't want to own because it's just a Me Too product that has no originality. It's a derivative of what's already been successful. So now we have a new category, and the category, king right now is GOAT, which is AI agent creates some sort of meme and launches a meme coin. And so it has a great story. Right, and it had Mark Andreessen giving 50,000 Bitcoin to Truth Terminal to get its own wallet.
$50,000 in Bitcoin.
Of Bitcoin, yeah. And then it created this coin called GOAT, and now it's trading. Maybe there was a human involved, maybe there wasn't. So there's a bit of like,
yeah. Well, just to be clear,
is it really like an AI coin? I don't know. Like it's got all these like.
Yeah, but the AI agent didn't create the coin, as far as I understand. It just got launched, but or the AI agent got into it.
Yeah. And so like, it's just a great story, right? And it's the first of its kind. That's what I want to invest in. Invest, very, very highfalutin word for what I'm doing. Gamble. And it went from zero to whatever at a high, I think it's reached up to 800 million market cap within 2 weeks, right? So if you look at the distribution of meme coins on a statistical basis, something like not 1%, something really small, like maybe 1 basis point or 10 basis points of all launched meme coins and pumped up fund are over 500 million market cap, something very, very small. So if you want to have the Lindy effect, which is that which has survived in the past shall survive in the future, then you want to invest in higher market cap meme coins because there's a greater chance that it exists within the next, 3 to 6 months, which is, a big if. Because there's no intrinsic value. This is really just mimetic concepts and how viral they are across the internet. And so past virality portends to future virality. Therefore, if I want to be in this asset class in general, these are the ones I want to own. I want to own something that's gone through 100 million market cap, stayed over 100, continues to be talked about on social media. So I aped into Go when it was about 300 billion market cap, right? Because, it's gone over 100, it's existed. There's a very high chance I could lose all my money, but that if I'm going to play in this game, I already accept those risks. Therefore, this has a better risk return profile than investing in sort of the next one down who says, I want to do the same thing. I'm going to have an AI agent trained on whatever it is, launch its own meme coin. And so there's a bunch of these like sub 100 million market cap copycat concepts, but I don't want to invest in those. Yes, there could be one that breaks out and goes to 100 million, 500 million, a billion, right? There will be one. If GOAT goes to 5 billion, there'll be one that goes to 1 billion. And then the rest of them are going to go to zero. The problem is, how do you pick the second one? Picking the first one's almost easier because it's the first time you saw it. You're like, oh, this makes a lot of sense. You saw people appreciate it in terms of the price appreciation on sort of Radium and Jupiter and some of these Solana trading platforms. It's easier to invest in GOAT than it is to find number two that you find number two at, I don't know, 25, 50 million market cap, and you think that's going to go to $1 billion. I know a lot of people have tried to be in that game. That's a very, very hard game. Yes, my returns, yes, you could make the 100,000x, but you have a way higher chance of losing everything. So that's why I like GOAT.
But so, I mean, essentially it's almost like you're saying that GOAT is like the Bitcoin of these types of coins.
Correct.
So then, like, for another kind of crypto AI coin to take off, there would need to be like some differentiator, sort of like an Ethereum to that. Is that?
Yeah. If we want to use sort of that taxonomy.
Okay. Yeah. And earlier you also mentioned a different meme coin, but I didn't catch it.
A smoking chicken fish.
So what is that one? I don't know what that is.
It's another, like, pseudo meme mimetic religion. It's a chicken body, fish head, smoking a Marlboro Red cigarette. I just think it's funny. And like the saying is like ramen. So instead of like amen, it's ramen because you're in a broth because you're chicken and you baste. Yeah, I think it's funny.
Is it also promoted by an AI?
No. This is just a standard meme coin. Just another, like, is this mimetic concept going to be viral or not? And I think it could be.
Oh, okay. Okay. Got it. Well, I'm noticing that it already has 20,000 followers on X. So I guess it's getting there. And what is the market cap on that one?
That's about a $60 million market cap. So a little bit higher risk.
Okay. So you went in there even though it hadn't reached the 100.
Yeah. I just thought it was funny and I liked the concept.
Okay. Why don't we talk about the fact that right after the election is the next Fed meeting? What are you expecting there, and how is that coloring your thinking about the markets, both traditional and crypto?
So it was quite interesting. So I was at a commodity investor conference in New York a few weeks ago, and Zoltan Pazar, he's formerly at Credit Suisse and the Dallas Fed a long time ago. He's an expert on money markets and like the plumbing of the fiat money markets. And he used to publish a very well-received and well-read essay, blog, whatever you want to call it, piece of research that went around the street. And he's now off on his own, doing his own thing. And he mentioned something that has been starting to get a little traction, which is, I'm going to be a bit technical here, that we've reached, at least in the United States has reached, the banking system has reached a point where the amount of banking reserves might be at the point at which the Fed needs to start doing QE again. So after 2008, banks went bust because they didn't have enough reserves backing, all these dodgy mortgages that they underwrote and kept on the balance sheets. So the Fed said, okay, we're going to enter a regime where the banks will never have not enough reserves. So we're going to do QE, which is I'm going to buy these bonds and credit reserves to the banking system. So right now, the banking system reserves are around $3.2 trillion. And what the Fed officials have been saying is that they're going to operate, they need to stop doing QT, quantitative tightening, which is reducing their balance sheet, taking reserves out of the system, and start putting reserves back into the system at the point in which the reserves are low enough to cause financial stress. And this is you can't really observe this a priori. This is an ex post observation that you can make. Oh, something fucked up, therefore there's not enough reserves. And so there's a sort of a repo scare about, a few weeks ago when the rate on sort of interbank lending spiked. And that indicates that we might be at that situation where the U.S. banking system, the amount of reserves that it has are not enough. So park that for a second. And then the second point is that if you take a look at who's been buying U.S. Treasuries on a marginal basis, obviously China, Japan really aren't participating that much anymore. Saudi Arabia and some of the oil exporting countries are not participating as much as they used to. But the demand has been soaked up by these hedge fund tax-friendly domiciles like Caymans, Luxembourg, United Kingdom. If you look at who marginally has been buying the most U.S. Treasuries, it's those jurisdictions, which means these are hedge funds. And these hedge funds are putting on a basis trade whereby they sell a futures contract on a bond and they buy these bonds. And usually it's sort of a treasury bill or some sort of bond, whatever the arbitrage exists. And so hedge funds don't really hedge funds always finance their purchases. So what they need to do is they go to the bank and say, hey, I've got this high quality collateral, US treasuries, risk-free debt, and I need to purchase them. Can you lend me money against that? And the bank says, sure, we'll do that. And so the banks lend these hedge funds money against this treasury collateral, right? Now, as the U.S. government has been increasing deficits to pump markets and pump the economy, the U.S. Treasury has been issuing more and more and more treasury debt. And so the buyers of this are hedge funds putting on this basis trade, this arbitrage trade. And then they need to finance it in the U.S. banking system, which takes sort of balance sheet away from them. And so the U.S. government issues more debt. The bank's balance sheets get more precarious because they're helping these hedge funds finance the purchases of this debt. And so we get to this situation where the banking reserves are inadequate for the level of federal borrowing. So one of two things can happen. Either the federal government stops spending money, which we know is not going to happen, right? Or the Fed stops QT, and at a minimum, the Fed slows down QT or stops it. At a maximum, they say, hey, the level of reserves, we've reached that point at which it's too low for the U.S. banking system. Therefore, we need to increase the amount of reserves. Therefore, we're starting QE again. We're going to go back in and start buying bonds. And so I think that given that we've seen a 70 to 75 basis point rise in the 10-year Treasury since the Fed cut rates, which is not supposed to happen, right? Everyone's like, oh, Fed cuts rates. That's because the economy, they're going to have a soft landing. Economy's going to slow down, but it's not going to go into recession. Therefore, these bonds are going to appreciate in value. The yields go down, but that's not what's happened. The yields have rocketed higher. I think I haven't looked at my screens this morning. They were about 4.3% on the 10-year, which is about 70 basis points higher than it was September 18th when they cut 50 basis points. And so now the Fed is a situation where it's getting expensive to finance the government. The folks that are financing the government are taking the bank's balance sheet away and causing these market disruptions in the things that they really care about. And so I think that we could see some language around them acknowledging that this is happening and sort of soft telling the market that QT is going to come to an end and QE is going to start soon, which is going to be very positive for risk markets, irrespective of what they do with the rate, whether it goes up or goes down. I think that almost doesn't matter. I'm focused on what are they going to say about QT, QE, and bank reserves. Maybe they're going to allow a question from one of the financial reporters to sort of like give them a softball so that Jay Powell can sort of allude to what's going to happen in the future. But I think that is the interesting thing that I'm looking for at the Fed meeting right after the election.
Wow. That is so interesting. I just feel like I learned a lot right then and there. So everybody, has been focused on the interest rates, but obviously if there's QE, then that is, I think that like I've seen this thesis from you so many times in various things that you've written that, that will pump the markets. And you think that will happen both for...
It's going to happen. The question is when. The Fed will start QE again because the only people buying treasury bonds at these prices are hedge funds doing these arbitrage trades. It's not real money buyers. It's not anyone who actually wants to own this debt. Everyone knows it's trash debt. Everyone knows that Trump and Harris are going to print money and expand the deficit to further their own government programs. And so why would I want to own this? It's trash. But I'll own it if I can make a few basis points in an arbitrage funding trade if I'm a hedge fund and I park those bonds in these jurisdictions. And this is what the data is telling us, right? It's not China buying these bonds. It's not the long money, the long only real money buyers. The Fed isn't buying them either, right? So it's the banking system financing the purchases of hedge funds. And so this leads to a problem in the plumbing of the markets. And we know that the Fed is very active in terms of trying to make sure that nothing actually happens. If we look back to March 2023 during the SVB and sort of the regional banking crisis in the US, the Fed and the Treasury responded immediately with printing money, right? The Fed's balance sheet went $400 billion a week after when SVB went bankrupt and they had the bank term funding program, right? And so they're very hyperactive to making sure that there is no disturbance in the financial firmament that they are supposedly supposed to manage. And so the election is almost a sideshow. I know people are like, oh man, the election, but like there are things happening that are so structural to how the United States finances itself that it doesn't matter who wins the election. I know that people are like, oh yeah, Elon Musk is going to come in and like eliminate $2 trillion of government spending. I saw that headline. How that is an utter crock of bullshit. The biggest three outlays in the U.S. federal government are the defense, Medicare, Social Security, and veterans. So Elon Musk is going to come into the government, one of the most militaristic empires we've ever seen in human history, and tell them, okay, we're going to cap or reduce the defense budget so you can't go bomb anybody else. We're going to tell all the old people, all the baby boomers, oh, we're going to take away your health benefits. And we're going to tell all the veterans that injured themselves in these wars that you're not getting any more benefits either. That's the only way that $2 trillion is coming off of federal spending. It's complete and utter bullshit. And so I think people need to stop focusing on this election. It's really corrupting your brain because the structural issues, regardless of who wins, are going to remain. And we know what the answer is. It's always printed money. And so if you're able to buy dips at using no leverage or very, very low leverage, if you're able to make your position sized responsibly for your level of net worth, then Trump wins, Harris wins, regulatory apparatus of the U.S., all this shit doesn't matter because the finances aren't changing. The math, the compounding interest, the demographics, the proclivity to spend money, that's not changing. And so I really think that people focusing on whether or not they're going to make another extra 5 percentage points on this election, but then they blow up their capital stack and can't really participate in the real bull market that's going to come is absolutely ludicrous.
Okay, so given that that's your thesis, then what are you thinking of in terms of trading? Is it the same that you just want to be long a bunch of positions, or
you want to be long positions? You want to be able to weather, short-term market dislocations. Like if you're long Bitcoin, Trump loses, or there's social unrest in the U.S. and say Bitcoin goes from 75,000 down to 50,000, right? You don't want to have to sell your position. You don't want to be shook out of your position because we know that they're going to print money. We know that there's these structural issues that neither party has decided to fix. Then Bitcoin goes from 50 to 250,000 and you look like a schmuck because, you needed to add a bunch of leverage on the 2 days before the election because you thought that Polymarket told you that Trump was going to win on a probabilistic basis, but you didn't understand the statistics and you didn't size your positions accordingly and you got wiped out. And then you couldn't participate in the massive bull market that is to come because fiat currencies are being debased in the United States, in Japan, in the EU, and in China to a massive extent.
Wait, when you just talked about how to properly size your positions, like how do you think of that?
I think of that as if you go to bed at night and you look at your phone and look at the price of crypto, your position is too big.
Wait, I'm sorry, repeat that? If you
go to bed and the last thing you do is you look on your phone and you check the price of crypto and you're in any way worried about what that is while you're asleep, your position is too big.
Okay, I like that advice. Well, so you just mentioned a bunch of global things, which I was also interested in because your most recent Crypto Trader Digest was about China. Can you talk a little bit about, what you see happening there and how you think that will affect both traditional markets and crypto markets?
So China, just like the US, Japan, and the European Union, has experienced its property bust, right? And so we know that the medicine that all these other three countries or economic blocks used was take interest rates down to zero, pump liquidity in the system, that's quantitative easing, and expand how much banks lend to the politically right industries. That's what happened. Recapitalize the banks, let them lend again. And so China's going to do the same thing because the alternative is there's another way to solve this problem, which is let everybody go bankrupt who took too much leverage. But nobody wants to do that. That's not how you stay elected, and that's not how you stay in power if you're in an autocratic government. It just doesn't help. It doesn't matter. So deflation and sort of right-sizing your economy for the appropriate level of growth and demographics, that is never on the cards for any government, no matter what ism they pretend to believe in. It's certainly not in China. And so they've suffered enough pain, and now that the Fed has started this easing cycle, China can do the same. And so that's what they're going to do. They've already started doing QE. The PBOC, People's Bank of China, has started buying government bonds again. They have told the party officials, hey, I know that I've been doing these corruption things, right? Corruption's bad. We're going to come after you if you've lost money and you've misappropriated things as a party official. They've now softened that stance. There was a recent circular released to party officials basically saying that if you are going for growth and you make mistakes, that's okay, which is different than what they were saying before, which is go for growth, but don't fuck up, right? And so now that they've given carte blanche to party officials who are in charge of the banks, in charge of the local governments, in charge of the property developers to go out and do business again, to take credit and reflate the economy, we're going to see broad credit growth grow in China on the bank credit. We're going to see the PBOC's balance sheet grow, and we're going to see China do the same thing that the US, the EU, and Japan has done for the last 30 years. And given the scale of the property, the misallocated amount of capital in the property market, which is in the single digit or 10 trillion US dollars of misallocated capital, that's the type of money we're talking about that they're going to have to print. And so it's going to be analogous to how much money the Fed printed from 2008 until the present, right, to solve its financial collapse, or how much money Japan printed from 1989 until today, or how much money the EU printed from 2011 when Draghi gave the "we'll do whatever it takes" for the ECB between then and now. So China's going to do the same thing. I know that a lot of people are saying, "Oh, China's not doing enough." Well, the Fed wasn't doing enough in September 2008 either. The market didn't bottom until March 2009 at 666 on the S&P, and then we rallied, right? So the initial response is not, oh, they're doing enough. It's, oh, you started? We want some more. We want some more. Give us more money. Give us more money. Because the hole is this big. You only give us this much. Give us more. And China will give you more because deflation is not on the cards for any of these politicians or any of these economic or political systems. And so I think that's one thing that people are missing here. They're getting too caught up in, oh, the property big bus is this big. Well, okay, give it 10 years and $10 trillion. Did they solve it? Probably. Did you sit on the sidelines and miss one of the biggest rallies in risk assets because you were too so focused on what they did today and not thinking about what they're going to do in the future? That's the point I'm making. And so Bitcoin and finite supply assets that are globally fungible are going to do very, very well, gold and Bitcoin. And so I think this China thing is probably the biggest thing that matters. Again, the election is a sideshow. It doesn't fucking matter who wins the U.S. election. It's irrelevant to the returns, your long-term returns of your portfolio. Understanding how the change in the Chinese stance on their monetary policy affects the West, that's way more important. And you should be spending your time looking at that and reading about that versus going on YouTube and listening to the Trump ad, the Harris ad, or this person fucking up or that person fucking up. It doesn't matter.
Okay. Well, this is so interesting. And then I also wanted to ask, because earlier this summer, we saw the start of the Japan carry trade and unwind, and, the markets did not react super well to that. And I wondered, what you thought would happen going forward. Like, do you think that's over? Do you think the markets that could continue and also affect the markets adversely? Or what are your thoughts?
I mean, I don't know when it's going to happen, but rates in Japan will rise. Dollar yen will go near 100. And Japanese capital will come out of the West and repatriate at home to shore up the Japanese economy. Now, I can't tell you how long it's going to take, right? Because we just had the LDP lose majority in Japan on Sunday.
That's what some party?
That's the party since whenever they got out of the U.S. colonialism period after the war. That's the party. They always win. I think they lost in 2009. That's probably one of the only years they lost. But they lost. They're not the majority anymore. And so the question is, what is the political pressure on the BOJ, the Bank of Japan, to normalize rates, i.e. hike rates? So we have a BOJ meeting on Thursday. I don't know if this will come out by then. We'll see what Ueda-san says about the path of BOJ rate normalization. Dollar yen's at 153 right now, something around there, right? We're almost back to 162, the highs of dollar yen right before it collapsed. So the BOJ might surprise the markets and hike rates because there's political confusion. So they're not getting pushed by a particular politician to slow down because there is nobody in charge right now. Ueda was appointed to the BOJ to unwind Kuroda's policies of yield curve control, weak yen, balance sheet expansion. So that's his job. And so the question is how long it takes him to do it. I mean, he said he's going to be very patient in doing it, but this might be an opportunity for the BOJ to raise rates given that the politicians are in such a disarray that they can't pressure him to stall it.
Okay. All right. Well, then I guess it looks like we'll have to see
Again, a lot of this is a very complicated situation and very interesting, very important. And it's not the U.S. election and again, the U.S. election does not matter.
Wow. Okay. I love ending on that contrarian take. Thank you so much, Arthur, for coming on Unchained.
Thanks for having me.
I'm here with Unchained's regulatory reporter, Veronica Irwin, who wrote 2 articles this week that will likely be of importance to people ahead of the election. But before we get going, I just want to explain to the audience that the reason my background looks different and also my mic may sound different is that we had initially recorded this on Wednesday. And then Thursday, there were some unexpected developments that forced us to re-record. And I am now in a different location and had to borrow a mic. So Veronica, the first story you wrote this week was about Stand With Crypto's scorecard. What did you find there?
Yeah, so I have been using Stand With Crypto a lot as a reporter for kind of shorthand on how different politicians fall on crypto policy and crypto regulation. They give you a very simple grade for where every politician stands, and it's easy to understand. And so I wanted to know more about how they arrive at those different grades. And so I reached out to the executive director, Logan Dobson, and he walked me through the process somewhat. And it honestly seems like it's kind of wishy-washy or dependent on the specific circumstances. He basically said there's a loose general rubric. For example, a policy paper is more valuable than a tweet. An on the record official statement is more important than something said offhand. And that votes were the most important because actions speak louder than words, is how he put it. But he also said that, he ultimately makes the final call on who or on what a grade for a politician is, and that he also engages in one-on-one conversations with key stakeholders, he said, who weigh in on the process.
And so there were a couple other things that you found in the initial story, which was you felt, or there's another kind of job that he has that that it seems could present conflicts of interest.
Yeah, so he declined to talk about any job that he has other than his current job at Stand With Crypto, but there's a conflict of interest, so to speak, with the fact that he is currently also vice president at a firm called Targeted Victory, which is one of the largest recipients of the Republican Party in elections this year on Open Secrets, which tracks Federal Election Commission data. And they have a long history of working with Republicans and other, right-leaning or on different right-leaning issues. And that provides an incentive to make Republicans look better than Democrats, I think. I will say that the comms person for Stand With Crypto did reach out and say that that is untrue, but she did not elaborate as to why that's not the case.
And the last bit of your story was about whether or not they have a Fairshake affiliation.
Yeah. So this has also been something that I think a lot of the crypto community has wondered about, because on the Stand With Crypto homepage, there's a tracker of how much money has been raised for pro-crypto candidates this election cycle. And the tracker lists a very high number. And when people pointed out, maybe that's Fairshake money, they actually responded to that criticism and started breaking out how much of that money is Fairshake and how much of that money is Stand With Crypto. So now if you hover your mouse over that number on their homepage, it does the breakdown, and the vast majority of it is money that's been donated to Fairshake. Strangely enough, Logan Dobson says they have no affiliation, and he wouldn't really explain why then they lumped their fundraising numbers together.
Okay, and then you also talked to separate sources about why they might not want to be public about that affiliation.
Yeah, so there's some obvious, shared connections, I'll say. Coinbase founded Stand With Crypto, and Coinbase has now donated at least $50 million to Fairshake. They've done so very publicly, one time in June, and then one time again this week, $25 million each time. And when I reached out to other folks involved with crypto politics and policy, they essentially said that because of some negative press coverage that Fairshake has gotten recently, Stand With Crypto probably wants to distance themselves as much as possible. There was a New Yorker article not that long ago that went into Fairshake's strategy and really highlighted how they've been running a lot of attack ads. And there's been several other smaller news stories that also covered that. And so this source that was willing to talk to me a little bit on background basically said that they probably want to distance themselves because of that PR.
And so the reason that we're re-recording is because after we published the article, you heard back from Stand with Crypto.
Yeah, this was a very strange situation. I've never had a situation like this with another publicist.
Yeah, and actually I should say, because I have a lot more experience than you, I also have never had this kind of situation before.
Yeah, all of this started when I direct messaged Logan Dobson in early October saying, hey, I want to do a call with you. I'd like to set up a call. And he told me to get in touch with their publicist. And this publicist, Sabrina Siddiqui, we went back and forth for several weeks about scheduling a phone call. She and I actually hopped on a 5-minute call where she asked what I wanted to write about. And I was very clear that I want to write about why Logan Dobson works here and why a scorecard and how they come up with the grades for this scorecard. She didn't seem to have any problem with it. But once we got on the phone, she and Logan Dobson both said, this whole phone call has to be on background, which for those of you that don't know journalism speak, that means not for attributions. You can quote the source, but you can't say who they are. And that otherwise they wouldn't be able to do the call, and that I would have to email them afterwards to get any comments actually on the record. So we did that whole phone call interview. And then shortly thereafter, I emailed them for on the record comment on all of these things. And they ended up never responding to me on it until I wrote the story.
And you had given them a clear deadline, so they knew when they had to respond by.
Yeah.
And there were, I think, 5 emails and 1 text message. So
yeah, I emailed them 5 times. I texted them once. The final email was a very thorough line by line fact checking email, we call it, where we just run every single statement we're going to say about them by the organization so that they can say what they find untrue or what they want to provide a comment on. And I gave them a very clear deadline. And I got no response. But then hours after the story was published, I got...
And we should say, when we published it, so when you were telling me earlier about all the things that they said for the article, initially when we published it, we had to say it was a source. What was the phrasing?
A source directly involved with the grading process is, I think, how I'd put it. I wanted to make it very clear that the source knew what they were talking about and that they were very involved in what they were talking about because, a single source is a little bit iffy. So I wrote all of the quotes that Logan Dobson had given me, but without attributing them to Dobson. And then hours after, I got a text from the publicist asking why the story was sourced the way that it was, even though I had told her it was going to be sourced the way that it was in that final fact-checking email.
And you were executing the terms that they had set for you.
These were their terms. Sabrina has worked in communications for over a decade for the Senate and the House and the Treasury and Meta. So I assume that she knows what those terms mean. But she texted me asking why didn't I quote him? And said that in a follow-up email Thursday morning that the way that I wrote it sounded like somebody had leaked and that I should put it all on the record.
Right, even though they were the ones who had requested all of that.
Yeah, it was... I'm still kind of perplexed what happened there. Because these were their terms, and Logan has worked in communications as well for over a decade, more political communications. So has she. I thought they would know what those terms meant.
They do, but for whatever reason they...
So we updated the story. I wrote a tweet thread explaining this as well for readers because I realized this is kind of in the weeds with journalism speak. And we also republished the newsletter with this information.
Yes. So for those of you who received the newsletter twice, and also now if you see on the website, we included the strikeouts of where we changed copy. But that's because that is how the events transpired. And haven't experienced that before, but 26 years into doing this, I guess there's always a first time for everything.
I guess so.
So your other article this week was about SEC Commissioner Hester Peirce, aka Crypto Mom. and whether or not she might want to become SEC chair if Trump wins the presidency. What did you find there?
Yeah, so it seems like it's kind of an open secret if you are engaged in crypto politics and if you're engaged with SEC regulation and advocacy on this issue, that Hester Peirce does not want to be chair of the SEC. I spoke to plenty of sources that said, oh yeah, no, that's something that everybody kind of knows. But I was able to get in touch with 4 sources that do speak with her directly or speak with people in her orbit all the time about this. And she's made it very clear. Some said for at least a couple months. One source said they've known this for at least a year, that she is just not interested in a role that political, that she is very much a public servant. She has very strong values that she feels like have been important for her to voice as a dissenting voice on the commission, but that she doesn't want to be in charge.
Which is really interesting because most people would have expected that she would want such a position given her outspoken takes on crypto. So, why is it that she doesn't seem interested?
Everybody explained it to me the same way. That's really just a personality thing. The chair role is a much more political role, and you have to kind of manage the whole commission, and you have to navigate the politics of compromising with this person or agreeing with this person to get things done. And she is just much more ideologically firm. She has very strong views, and she likes having, I think, the freedom to speak those views without having to deal with the politics of it all.
So given all that, did they have a theory about what might happen if Trump becomes president, and as he has promised, he would, fire Gary Gensler on day one? So what are their theories?
Yeah, so he can't legally fire Gary Gensler, but he could demote him on day one if he wanted to, and that would mean that there's probably an interim period where we have an acting SEC chair, and it is possible, especially for someone like Hester Peirce, that, like my sources said, is very values driven and also really believes in being a public servant. It is possible that if the president called on her, that she would serve as that acting chair. But like I said, she's making it very clear she doesn't really want that job. And it sounds like when her term ends in 2025, that she actually wants to return either to research or the private sector. I heard divided views on that.
Okay. Yeah. And I think people are theorizing that potentially Mark Uyeda, who is actually also much more friendly to the crypto industry, would be open to having that interim chair role.
Mm-hmm.
So, all right. Well, it's been a pleasure chatting with you. Thanks so much for sharing what you found.
Thanks for having me.
Don't forget, next up is the weekly news recap, today presented by WonderCraft AI. Stick around for This Week in Crypto after this short break. Polkadot is the original and largest Layer 0 blockchain with over 2,000 plus developers. The anticipated Polkadot 2.0 upgrade will be a massive accelerator for the ecosystem, upgrading the infrastructure with 8 times higher transaction throughput and twice as fast block times, tailored core time for the needs of every protocol, trustless bridges to multiple chains, and revised tokenomics with a token burn to reduce inflation. Perfect for GameFi and DeFi to build, grow, and scale. Get your Web3 ideas to market fast. Think big, build bigger with Polkadot. Join the community at polkadot.network/ecosystem/community.
Welcome to this week's Crypto Roundup. In today's recap, we dive into Optimism's controversial grants, FTX's strides toward customer refunds with a $228 million Bybit settlement, and Reddit's surprising move to sell off most of its cryptocurrency holdings. We'll also cover ex-FTX exec Nishid Singh's sentencing, Coinbase's launch of an AI-powered crypto agent creator, and Circle's new USDC redemption fees. Plus, we'll touch on recent layoffs at Consensus and DYDX, Phantom Wallet's outage during a high-demand airdrop, and MicroStrategy's bold $42 billion plan to boost its Bitcoin holdings. Thanks for tuning in to the weekly news recap. Let's begin. Optimism's grant sparks debate. Crypto exchange Kraken's recent decision to build a Layer 2 network, Inc., Using Optimism's OP stack has ignited controversy following a CoinDesk report revealing the significant financial incentive behind the move. CoinDesk's scoop revealed that Kraken received a substantial grant from the Optimism Foundation, 25 million OP tokens, currently valued at $42.5 million, giving it a significant financial incentive to join Optimism's Ethereum-linked superchain. The grant, part of a structured release tied to transaction milestones, has led to questions within the crypto community about whether such incentives compromise the decentralization of the Layer 2 ecosystem. Optimism's Chief Growth Officer Ryan Wyatt defended the grants as essential to fostering development, writing that the collective is not going to stop investing in developers. However, critics argued that financial inducements to major firms such as Kraken and Coinbase, the latter of which launched its own Layer 2 base last year, risk tipping the ecosystem towards centralized control. Related projects are also tapping into Optimism's resources. Bitcoin-based Layer 2, Bob, which aims to integrate Bitcoin with Ethereum, received an OP grant of around $870,000 to join the superchain. Similarly, Swell, which had initially planned to build on Polygon, is now developing a roll-up on the OP stack, though it is not confirmed if it was incentivized by a grant from the Optimism Foundation. Former FTX exec Nishad Singh avoids prison. Nishad Singh, FTX's ex-head of engineering, has been sentenced to 3 years of supervised release, avoiding prison after cooperating extensively in the high-profile case against FTX founder Sam Bankman-Fried. Singh, who pleaded guilty to 6 charges in February 2023, including conspiracy and wire fraud, provided detailed testimony that aided prosecutions of Bankman-Fried and other FTX figures. His cooperation was praised by Judge Lewis Kaplan, who noted that Singh's actions helped the government uncover unknown details of FTX's financial misconduct. The court recognized Singh's remorse and family support, with over 20 relatives in attendance. Despite facing potential decades-long sentencing guidelines, Singh's extensive cooperation and his limited early involvement in FTX's collapse weighed in his favor, leading to the court's leniency. DWF Labs fires partner amid drink-spiking allegations. Crypto trading firm DWF Labs has terminated a partner after allegations surfaced that the individual spiked a woman's drink at a Hong Kong bar. The incident came to light last week when an ex-user posted claims that a DWF Labs partner had drugged her, reportedly with video evidence. DWF responded swiftly, issuing a statement that described the allegations as deeply concerning and announcing the partner's immediate dismissal from all management and operational roles. The company, which is currently conducting its own investigation, emphasized its commitment to transparency and upholding the highest ethical standards. The press release further underscored DWF's core values of integrity, respect, and accountability, noting that it would not condone any behavior contrary to those principles. Hong Kong police have been notified about the incident, though neither the individual's name nor any additional details were disclosed by DWF Labs. Reddit sells off majority of crypto holdings. In a recent SEC filing, Reddit disclosed it had sold the bulk of its cryptocurrency holdings in the third quarter, liquidating Bitcoin and Ether previously held for treasury purposes. While Reddit hasn't detailed the total amount of the proceeds, the sale occurred before October's significant Bitcoin rally, when prices remained between $54,000 and $73,000. The move signals a shift, as Reddit had been an early adopter of crypto initiatives using Ethereum-based Polygon to power virtual collectibles. While Reddit continues to hold some Ethereum and Polygon assets, mainly from avatar sales, it said that future crypto investments would require board approval. Consensus, DYDX, and Kraken announced layoffs. Crypto giants Consensus, DYDX, and Kraken all announced significant layoffs this week. Consensus, the Ethereum infrastructure firm behind MetaMask and Infura, disclosed it had cut its workforce by 20%, attributing the move to broader economic pressures and regulatory hurdles. The macroeconomic environment has created challenges for our industry, the company stated, emphasizing the need to streamline operations for long-term sustainability. Meanwhile, crypto derivatives exchange DYDX took more drastic measures, laying off 30% of its workforce as CEO Antonio Juliano cited the need to make a strategic pivot. "The company we've built is different from the company DYDX must be," Juliano noted. The reduction comes as DYDX faces rising competition, particularly from rival Hyperliquid, which has surpassed DYDX in total value locked. Moreover, major crypto exchange Kraken also laid off 15% of its workforce and announced a new co-CEO, aiming for a leaner structure after reporting organizational challenges tied to its $1 billion revenue growth as a remote company. Tapioca DAO strikes back. Decentralized finance protocol. Tapioca DAO has made waves this week by successfully executing a counter-exploit to retrieve $2.7 million in stolen funds from a hacker. This bold move came after a $4.7 million breach that saw the hacker siphon millions of TAP tokens, causing the token's value to plummet by 96% and leaving investors reeling. According to a post-mortem report, Tapioca's security team used a carefully timed exploit to recover 996 Ether, worth approximately $2.7 million, before the hacker could fully launder the funds. The report attributes the initial breach to a North Korean hacking group that targeted a Tapioca DAO engineer with malware in a social engineering attack. Though the protocol still faces a 45% overall loss from the incident, the counter-hack is a rare but successful example of turning the tables on attackers in the DeFi space. Coinbase launches Based Agent for rapid AI-driven crypto automation. Coinbase has unveiled Based Agent, a new tool enabling developers to create AI-powered crypto agents in under 3 minutes, marking a significant step toward integrating artificial intelligence with blockchain operations. Announced by developer Lincoln Murr, Based Agent runs on Coinbase's Layer 2 network, Base, and is powered by technologies from OpenAI and Replit. With API keys from Coinbase and OpenAI, developers can quickly deploy customizable AI agents that manage on-chain tasks, including trading, staking, and interacting with smart contracts. FTX secures $228 million settlement with Bybit. Bankrupt crypto exchange FTX has reached a $228 million settlement with Bybit, advancing its efforts to reimburse customers impacted by its 2022 collapse. The settlement allows FTX to reclaim $175 million in digital assets from Bybit and secure an additional $53 million from the sale of BIT tokens to Bybit's investment arm, Marana Corp. The agreement, which includes dropping ongoing litigation by FTX against Bybit, recovers nearly all of FTX's targeted funds. FTX's court-approved repayment plan aims to distribute $12.6 billion to customers, with initial payments expected within 60 days of the effective date. DeFi Education Fund challenges SEC's regulation by enforcement. The DeFi Education Fund has filed a new brief in its lawsuit against the SEC, asserting that the agency's approach to regulating crypto projects, particularly airdrops, exceeds the agency's legal rights. In the brief, filed alongside apparel brand Beba, DEF argues that the SEC's repeated enforcement actions amount to an unapproved policy on digital assets, violating the Administrative Procedure Act. The APA requires formal notice and commentary, a process DEF claims the SEC bypassed. Coinbase, CoinCenter, the Blockchain Association, and several crypto VC firms have filed amicus briefs in support of the DEF's stance. In those briefs, Coinbase emphasized the agency's conflicting statements on digital assets, while CoinCenter argued for the DEF's legitimacy in representing crypto developers facing regulatory uncertainty. MicroStrategy unveils ambitious plan to expand Bitcoin holdings. MicroStrategy announced plans to raise $42 billion over the next 3 years in order to buy additional Bitcoin under its 21-21 plan, with $21 billion raised via equity offerings and $21 billion through the sale of fixed income securities. The capital raises and purchases will serve to bolster MicroStrategy's position as the world's largest corporate holder of the cryptocurrency. As of September 30th, the company held 252,220 bitcoins, valued at around $16 billion. The firm also reported a year-to-date BTC yield of 2% and expanded its Bitcoin holdings by 11% in Q. Despite reporting lower-than-expected revenues of $116 million, CEO Fong Lei affirmed the company's commitment to driving shareholder value through strategic digital asset investments. Circle increases, USDC redemption fees. Stablecoin issuer Circle has raised redemption fees for its USDC stablecoin, marking the second fee hike this year. According to a Bloomberg report, USDC holders will now pay tiered fees, with redemptions over $2 million incurring 0.03% to 0.06% fees, depending on the amount. This increase follows the introduction of a tiered redemption plan in February, aimed at streamlining cash-out processes, but with added costs for larger transactions. Phantom Wallet faces outage. During Grass, token airdrop frenzy. Solana's popular Phantom Wallet experienced a nearly 3-hour outage on Monday, coinciding with a high-demand airdrop of Grass tokens. Phantom's backend issue, which caused inaccurate balance displays for some users, began just 6 minutes after the Grass airdrop launched. Phantom confirmed on X that services were restored, adding that the team would continue monitoring the situation. The outage occurred as users flocked to claim 100 million Grass tokens, which were distributed to participants monetizing unused internet bandwidth through the Grass platform. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.substack.com, that is unchainedcrypto.substack.com, and sign up for our free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin, with help from Matt Pilchard, Juan Aranovich, Megan Gavis, Pam Majumdar, and Margaret Correa. The weekly recap was written by Juan Aranovich and edited by Nelson Wang. Thanks for listening!
Unchained is now a part of the CoinDesk Podcast Network. For the latest in digital assets, check out Markets Daily, 5 days a week, with host Noel Atchison. Follow the CoinDesk Podcast Network for some of the best shows in crypto.